Wow. Yeah, sure. I think we can start our class as the rest join us online. And I think one of the things that we were talking about last time was export credit. And I remember we said that export, when you see the word export in simple terms, in a very simple way, we mean that we are trading between customers who are in different in different nations, or they live outside the border. One is in a different country and another one is in a different country. So we said that this kind of business has its own challenges in terms of there are risks involved. And the risks involved, we talked about political risks, we also talked about exchange risks, we also talked about borrowers risk or customer risk. So you have to think of all those risks, because you are likely to, if you lose your money, the loss will be so great. So we talked about all that. What else do we talk about? Yes, we talked about legal issues. That is also a risk or a challenge when we are trading with customers who are outside the borders of our country. We talked about the buyer's government, also government. Like a good example is when we have made adjustments to our taxes and all that. So we have, it impacts on maybe our international customers or people who are selling to each other through the country. Maybe the excise duty has been increased from this to this. So that also becomes a challenge due to what we call the physical policies that are undertaken by the government. We talked about economic factors. We talked about foreign exchange and all that, right? So today, so that we can finish up this topic of export, I wish to talk about export credit documentation. I'm sorry in case I mentioned it, there is no harm then in talking about it. We said because when you're exporting, you require a great number of documents. So there are so many documentations that will be required during this export credit or export trade. And we know that credit is what? Credit is, we talk about good credit is all about documentation. So poor documentation in this export credit, just as we have the trade credit and even the banking, when the banks are lending, if the documentations are not done right, then they can lead to a delay or even an unpayment. So you may end up losing, or even when you export the goods and they do not have the right documentation to show that they have been passed by the various bodies, KEBS, watu wa health, hizo vitu zote, unaweza pata hizo mzigo imeenda na imetupwa. Think of now the way we export, there are people who export meat from here to Saudi, and that is a Muslim community. So if the product will be lacking in what we call maybe the health certificate to show they are halal, that the meat is halal, you can imagine the damage that will be caused. Those products will go there, they will not be accepted, and they will be a loss even to the person who was selling. So export requires that all the required documentation are taken care of. So just like in any other trade, documentation in export credit is a must. Which documents will you find in export credit? One, we talk about commercial invoice. A commercial invoice. This is just like the invoice we talked about in trade credit, which contains the prices. Request. He's muted. Yeah. So we find that just the same way we have an invoice in trade credit, we also have a commercial invoice. It's now called a commercial invoice under export credit. It shows the quantities, the prices, buyer details, the goods, shows the weight, the packaging, the declaration or the certification for custom purpose. So those are the things that a commercial invoice would contain. It's more of like the trade credit invoice that we normally use, but this one now is more detailed. We are seeing that it will even show packaging, declaration, or certification for custom purpose. So if ever you have ever imported something, it comes with this commercial invoice. It is the one that the Credere or the custom department will use to calculate the costs for the much you're going to pay in terms of duty, in terms of excise duty. So a commercial invoice, we have it also in export credit. The other one is a pro forma invoice. This is also another document which you find. A pro forma, this is an invoice which is normally prepared before the goods have been forwarded, and it is normally used for maybe processing payment. It is also normally used to obtain authority, and also obtain authority from the government, maybe of that country, so that they are able to import the goods. So the pro forma invoice, it acts as a collection tool, because against it the buyer is able to make a payment, and it will now be supported by a commercial invoice. So just the same way somebody tells you, can I have a pro forma invoice? When someone is asking for a pro forma invoice, they want to process payment. They want to pay you in advance to process payment and even seek authority. So that is document number one. The other one too, consular invoice. A consular invoice, we normally say, just as the word consular, the consular, we talked about the consulate. When you're talking about consulate, embassy, you are talking about an embassy. So we normally say consular invoice. It is usually in a form of it is a form, yeah. That invoice is a form, and it is issued by the embassy or the consulate in exporter's country for statistical and custom purpose. A good example, I want to export goods to Uganda. So I will go to the Ugandan mission here in Kenya, or the consulate of Uganda, and then they will require me to fill a form, which is the one we are calling a consular invoice, and they will I'll give all the details about what I'm selling to the customer in Uganda. I capture the quantities and everything. Why do they do this? It is for the purpose of statistics. That is why you are able to hear when the government is reporting, they usually say that the last 1 year we have sold this much to Uganda, or we have purchased this much to Uganda. So the consular invoice, remember, it's an invoice that is issued on a form issued by the embassy. So you go there, iko kwa kitabu, ni kama iko na, of course it has many pages, many copies. So unajaza, ndio inaitwa consular invoice. So when you're exporting, you may be required to combine your commercial invoice, your consular invoice together with mzigo ikienda, to show that you have gone through the importer's embassy. Then after consular invoice, we have what we call a legalized invoice. This one, legalized, is whereby you have gone to the embassy of the importer, and they have certified it as correct, as accurate, as good, and it is okay. It's yes, legalized, stamped and recorded by the embassy or the consulate of the importer. So after you've done the invoice, they require the invoice to be legalized. It could be a commercial invoice, but they have indicated one requirement is that invoice must be legalized. So meaning it must be stamped by the embassy of their country that is located in the exporter's country. Number 4, we have what we call certified invoice. A certified invoice. It is, of course, it's still an invoice, but this time it contains a rubber stamp, or it has been approved, or it has been certified by a body, an independent body in your country. For example, a good example is members of Chamber of Commerce, Kenya National Chamber of Commerce. They could be required to make sure that their documentations have properly been stamped. So certification, just the same way we normally certify, this is a copy of the a true copy of the original. So it is already certified that indeed you have passed through some requirements under a given company. So under invoices, we have the commercial, pro forma, consular, legalized, certified invoice. Now we go to the other category, which we call transport documents. What are transport documents? These are documentation that you will be required to provide together with the goods. As I said, export credit has so many things that are required. So you will find that it will have what we call a bill of lading. This bill of lading, it means it's a receipt that you are issued by the carrier as evidence of contract of carriage and a document of title to the goods. So when I know we all come from a given village, like where I come from, when potatoes are ready, like now they are ready, my parent would want to send me potatoes from the village. So when they go and hand over the potatoes to the melo line, ile magari ya kuleta, atapatiwa receipt. Ama ukituma parcel, utapewa receipt. Sa kusema kwamba umepea mizigo yako imeingia kwa hiyo transport company na wamekubali na wamesema tumekubali, as long as the goods are on transit, we are responsible for those goods. So the same thing happens with the export market when you're doing export. So there is the bill of lading. Once you hand the goods to the carrier, they will give you a receipt as evidence kwamba you have contracted them and you have given them the goods and the goods are in their hands. So bill of lading. 2, there is what we call our airway bills. So airway bills, it's issued by airline carriers. So kama mzigo inaenda na ndege, tunakuwa na issued by airline carriers as evidence of receiving the goods, also as contract of carriage. Then we have what we call road or rail consignment notes. Road or rail consignment notes. What are these? This is a document issued by road transport or rail companies as receipt and contract. So it's serving a similar way. Then the other one is parcel post receipt. Hii tunaijua sana. Issued by postage companies as evidence of accepting goods for delivery abroad. Sasa wakati unataka kutuma mzigo through posta, you will be issued with a parcel post receipt, right? Then we usually now, other than the invoices, transport documents, we normally have other documentation that we normally, let me make somebody else kindly. Rose, allow me to make you, I don't know whether I'm able to make you an admin. I don't know, let me just check so that in case there is somebody else who logs in here. Na leo watu wangu wamenitoroka aje aki. Where are people today? Okay, sawa. Anyway, I'm not able, but I'll be checking when somebody wants to log in. It is okay. So we are talking about other documents or other certificates that you may require to obtain to accompany the goods for export. This one we talk about certificate of weight. I know you all know about measures. What tunaita scales, watu wa scales and measures. Avari Kenya, yani wanakupimia, even KEBS, they can give you certificate of weight. Mizigo lazima ipimwe. And with export credit, the weight of goods, kilos, whatever, are very necessary for purpose of billing. So you will find that the aspect of the weight of the goods on export is very particular. They are very particular as far as export is concerned. So utapata kuna certificate of weight, which you may get maybe to confirm that quality and weight of the product are in full conformity with the sale contract specifications. We have what we call inspection certificates, that goods have been inspected, they are of good quality according to the standards that have been required. Then we have packaging weight list. This is where it shows type of package, measurement, ikona yani urefu, ufupi, yani all those factors have been considered. We call it a packing weight list. The other one, we talk about insurance documents to prove that the goods have been insured when they are on transit. Export certificate. That is, you are talking about certificate of origin, inspection certificate, blacklist certificate, weight analysis, so export certificates. So you can have them, they can list all of them or they can combine all of them. Then there is export quota certificate. This is where the government says, we normally have what we call, I don't know whether we call it a go or something. Yeah, karibu Eric. So we normally talk about quota. Like when we are talking about exports, there is what a country has agreed that they will buy from your country. So they have to keep record on items that have been purchased by that country or customers in that country. So for purpose of ensuring the quota is not exceeded or to ensure that the quota has been achieved. So there is the export quota certificate, which is normally issued by government of the exporting country in respect of certain goods that have restrictions as far as exporting is concerned. Then we have another one we call bill of exchange. This one, this in unconditional order in writing, we normally say addressed by a drawer to another drawee, signed by the person. This is where now you're handing maybe the goods or you're using a bill of exchange for purposes of payment. Imesainiwa ni kama, you know, when you talk about bill of exchange, let me just explain this a little bit. A bill of exchange, when you go to central bank and you want to purchase the government bonds or treasury bills, they will give you what? They give you a bill. That means the bill is addressed. The bill is addressed to, maybe you may mute. The bill is addressed to, it's to you. It's addressed to who? They address it to CBK, telling them that Zipporah, such a time when she comes and when this time expires, she should be given the money of this amount. So a bill of exchange could also accompany the goods, maybe to ensure that a payment is given. Maybe there is a third party or somebody who is supposed to pay you, so that once that one is received on the other end, a payment is released. Then there are other what we call health certificates, and the others can be delivery order that goods have been delivered. So these are the documents maybe you need to familiarize yourself with as far as export credit is concerned. You just get to understand we have the transport documents, we have the invoices, the pro forma, the consular, the legalized. The other one is now the other certificates that you need, which we have talked about: certificate of weight, inspection certificates, packaging weight list, insurance documents. All those documents, it's good to familiarize yourself just in case the examiner asks you to explain or to list documents that you will find in export credit. Eric is here representing you physically. Yeah, sawa. So kwa hivyo mko well represented hapa na Eric. Haya. So I hope, are we good? Any question? So far so good. Just unmute, say yes, we continue.
Yes, we are good.
Very nice. Thank you. Assure me you are there. Now I want us to look at a part of what we are supposed to cover, and this is what we call international commercial terms, or yes, we call them Incoterms. Yeah, international commercial terms. When you see Incoterms, this one is telling us that there are terms that have been accepted all worldwide. So when you see that term, you will not only understand it from your point of view or from your country, but it is acceptable countrywide, in any worldwide. So, and these are terms that are normally common, whether you are exporting from America, importing from Japan, exporting to China. When your documents contain those terms, then they are clearly communicated. Everybody should be in a position to understand. And I think this is where now when you deal with people who do with clearing and forwarding, you will hear them mentioning these terms, and you are wondering what do these terms mean. But thank God that today we are going to look at those terms. So this one, they are widely used terms of sale. They are internationally recognized, as I've mentioned. They define the responsibility of sellers and buyers. They specify who is responsible for paying and managing shipment, insurance, documentation, custom clearance, and other logistical activities. So if somebody asks you a question that what is the purpose or what role does the Incoterm play, I think you can be able even now to talk about it, that they define the responsibilities of sellers, of buyers, right? In terms of shipment, in terms of insurance, in terms of documentation, custom clearance, and other logistical activities that are involved in the export credit. So kindly get that very clear. So if somebody wants to know about what you understand by Incoterms, you can comfortably talk about that they are terms that are internationally recognized. They are used locally here, they are used in Kenya, they are used in Japan, and they define the responsibility of the exporter and the importer as far as factors like shipment, insurance, and other documentations are concerned. So I have listed all of them, but even as I discuss about them in our today's class, take time to also to read through, research more, so that you can also understand the terms more. So there is the first one, we call it ex-works. Ex-works. So ex-works, what does it imply? So it describes when a seller makes a product available at a designated location, and the buyer of the product must cover the transport costs. So meaning nakwambia X factory, X what? X industrial area or X Mombasa. So when it is X Mombasa, I'm saying I'm providing the goods up to Mombasa. Yes. And you, the buyer, transport from here, my industry, to Mombasa, you are the one who is going to take care of it. So X works. So I'm delivering the goods to that place, but just know that you are the one who is going to cover the transport of the goods from my factory or from my go down. So it's called X works. EXW. So X works. Then there is this other one, the second one, we call it FCA. So free carrier. Free carrier. So it means the seller is responsible for export clearance and delivery of goods to the carrier at the named place of delivery. So if they are going by ship, or if the goods are going through JKIA, so it is my responsibility as Zipporah to have all the export documentation done, and then I deliver the goods to the Kenya Airways to have those goods now delivered to the customer. So that with free carrier, it means I am taking the goods, paying for the goods, the transportation of those goods until I hand the goods to the carrier. So that is what we are saying, free carrier. So unasema free carrier to JKIA, free carrier to Mombasa. So like those who export, who do a lot of tea, they take the tea to Mombasa, or coffee. So utapata documents zao ziko X-Works, ziko free on carrier, inategemea na ile contract mulifanya nayo with their customer. Then there is what we call CPT. CPT, carriage paid to. Carriage paid to. So remember pale juu tumesema carrier. So when it is carriage paid to Dodoma, carriage paid to Dar es Salaam, so it means the exporter or the seller incurs the risk and cost associated with delivering goods to a carrier to an agreed upon destination. So there is an agreed destination where you are saying that carriage paid. I have paid for the transportation of goods from this point to this point as we had agreed, and I have taken care of the risks when the goods are they are being delivered, or they are on their way to the place we agreed upon. Then we have what we call CIP, the short name of carriage and insurance paid to. Carriage and insurance paid to. So what does that mean? Seller pays freight and insurance. So the I brings in insurance, right? So seller pays freight and insurance to deliver goods to a buyer appointed party at an agreed upon location. So this means that the seller has agreed to pay all costs and suffer any potential losses of moving goods sold to a specific location. So hiyo ni CIP. Amelipia transport na amelipia insurance. So ile tumeongeza hapo ni I. So imebadilika pale juu tulikuwa na CPT, sasa tuko na CIP, right? So that there we are talking about insurance and carriage and insurance paid to a given destination. Then we have DAP. So this one delivered at place. So unaweza pata term hapo kwa invoice imeandikwa DAP, alafu DAP Mombasa or DAP this country or DAP whatever. So delivered at place. So mushakubaliana delivered at that place. So there are no other details of payment or anything. Just deliver at a certain place, tutachukua mzigo yetu. Then there is the DPU, delivered at place and loaded. Delivered at place and loaded. Unajua kuna mizigo ingine iko kwa container. So kuna hiyo cost ya kutoa mzigo kutoka kwa container iwekwe chini ifanywe hizo vitu zote. So inakwambia kwamba mzigo yetu itafikishwa hapo na lori, lakini cost ya ku-unload hiyo mzigo iko upande wako. So delivered at place and loaded, DPU. Then we have DDP, delivered duty paid. So una insert place of destination. DDP Mombasa, DDP Dar es Salaam. So delivery of goods and the cargo insurance, import custom duties and taxes to the final destination are paid by seller. So we ukipata hiyo mzigo unaenda tu kupick, ishafanywa kila kitu. So hiyo nayo lazima ilikuwa all those costs had been inserted in the invoice. Then the other, so these ones are very ones ukishajua. Delivered duty paid, delivered at place, unloaded, delivered at place, unajua tu, you know what those terms mean. Matukin, yani for us is just to understand that when you look at your export invoice, it contains all that information for purposes of ensuring that payments are made on time. Then we have FAS, free alongside ship. So seller places the goods alongside the ship at the named port and loaded at his expense. Good. Buyer pays loading fee, main carriage and insurance. So unikama ile ya juu ilikuwa DDP, insurance, transport, kila kitu imelipwa. Lakini FAS inasema mimi nipepeleka kwa ship, up to there ni up to you, ulipie loading, ulipie carriage na ulipie insurance. Free alongside ship. Free alongside ship. Mi nimeweka tu kwa meli, it is up to you. Nimeweka kwa ndege, ukifika huko utalipia transport. Then we have FOB, free on board also. So delivery of goods on board the vessel at the port of origin is at the seller's expense. Buyer is responsible for loading fee, main carriage and insurance. So hapo nayo unapata buyer pia hana hiyo mzigo tena, free on board. Delivery of goods on board the vessel at the port of origin like Mombasa is at the seller's expense. Good. Buyer is responsible. Buyer is responsible for what? For loading fee, main carriage and insurance. So free on board. Then we have what we call CFR, costs and freight. Seller pays the costs and freight to bring the goods to the port of destination, and risks is transferred once the goods have crossed the ship rail. So mzigo imetoka Mombasa, umeshalipia kama muuzaji, mzigo ndio imepelekwa hadi imepelekwa, acha tutumie tu Dar es Salaam, imefikishwa Dar es Salaam. Ikifika Dar es Salaam, ship itoe mzigo. Sasa ikishatoka kwa meli imewekwa chini. Sasa hapo ndio responsibility ya muuzaji inafika mwisho. So cost and freight. So I've paid for the cost of carrying the goods, everything, the freight is paid for to the port of destination. Kuna ile on board, kuna ile up to the port of origin. Hii ingine ni up to the port of destination. And then finally, we talk about cost, insurance and freight, CIF. So similar to CFR, but insurance for cargo is included and delivery of goods to the port of destination. So CFR, cost and freight, CIF, cost, insurance and freight, they are all included. So those are the common 11 Incoterms that you will find commonly used in the export trade. So all this, imagine, whatever, it may not contain all of them, but utapata mingi kona hii na hii na hii na imesema X-Works wapi, unasema Nairobi, DDP up to port of Mombasa, FAS to this or whatever port. So those are the common terms that you need to know. So those Incoterms are normally classified in terms of transport, the mode of transport that is to be used, payment for the main transport, and transfer of risk in transporting the goods. So as we were learning them there, it is good to, you can, someone may ask you, how are they, maybe you explain or outline or describe 3 classifications of Incoterms. They are on mode of transport, payment for the main transport, and transfer of risk transporting the goods at origin or at destination. So those are the things that you'll come across. So Incoterms for mode of transport, tunaweka X-Works, FCA, CPT, hizo zote. You can now take time and see how you can be able to classify that, but that should not worry you so much. So I have just summarized hapo chini tu, nimeweka X-Work mode, any mode of transport. Transport payment inalipangwa na buyer. Hii tu ni kufanyia summary tu usipotee. Risk transfer origin. Free carrier, any mode, buyer, origin. Carriage paid to any mode of transport. So ukipata invoice imekuja na ndege, imeenda na meli, imekuja na rail, utapata kwamba iko na FCA, X-Works, CPT. So hizo zote unaziona. Free on board sana inatumika on the sea. Who pays, who meets the cost, transport payment, it's by the buyer. So hii ni ya kukusaidia tu just to know how to classify. So that should be it as far as the terms are concerned. Kindly, I know now you all have access to the notes. Just familiarize and also do research. Kindly naomba, me I'm just doing 40%. 60% Eric ni yako, si ya mwalimu, si ndio? Yeah, so give it attention as well. I hope now we can comfortably say exam is next month. Exam is next month, but I will have covered and you will have covered. Kwa hivyo, tuendelee pamoja. Sisi wote tusome pamoja. So the role or purpose of Incoterms hapo chini, I think what do? We said they outline the responsibility of the seller. They outline the responsibility of the buyer, right? They also ensure that we do not have different interpretations. So they do what? They unify the export credit. They unify the export credit for all countries in the world. They also do that to ensure that there are no additional costs that you have to be told, mzigo inabidi. So they tell you how much you need to pay for the goods, especially like when you are told free on board. We unajua kwamba mzigo ikifika kwangu lazima nilipie duty, lazima nifanye hivyo vitu vyote ujitayarishe. Then each party even is obligated to provide cargo insurance. So it gives all this information. I think I had mentioned as we started up there. So each rule also specifies when the risk of loss or damage to the goods being exported pass from the seller to the buyer. by reference to the delivery provision. So those ones now I think are very clear to us. Then as we conclude this topic, we come to a final part where we talk about types of export dealers. Who are these that you're going to find when you are dealing with export credit? Types of export dealers that we come across in exports. Sana tunakuanga na watatu. Tunakuanga na export, tunakuanga na Del Credere agent. A Del Credere agent. When we were starting our lessons, we said the word credit comes from the word what? Credere, which means trusts, sindio? Which also translated can mean faith or can mean, we talked about trusts, faith and what? Eric, tuliongea juu ya hiyo. Credere, sindio tulisema, it's in translated, it means trust. So we see that we have a Del Credere agent. I want to believe comes from that word. These are agents that are used by exporters to distribute goods. So you have faith in them, you trust them. What are they supposed to do? They are required to obtain orders from buyers and obtain payment as well. They earn a commission for sales and collection. So these ones, Del Credere, we see that they are agents, of course, located in a country where you want to export. So their work is to go around, look for orders, and then they also collect. So they are trusted parties in exports. And this is the way we normally talk about how to enter. There is a question that we from other quarters, how to enter an export market. I think that is normally under exports and economics, how to enter an export market. This is, you can enter through agents. We call them Del Credere agents as far as credit is concerned. And then we have what we call distributors. Who are these? They are independent of exporters. This is now just like a local distributor. This is an agent, is a person who is, independent of the exporter. They are responsible to the exporter for payment of goods sold to them. They are given special terms in order to distribute and promote products. So you can choose to enter an export market through a distributor. So the distributor independently atalipia ataitisha mali, alipie, it's up to him, afanye promotion, auze, bora yeye akulipe. So where you are not depending for them to collect and get to pay you, but they whatever they order, they are supposed to pay you. So those are distributors. And then we have what we call having a subsidiary. So you may choose to enter an export market by opening a subsidiary, meaning you open a company, or you create a company in a foreign country, and then it becomes like your subsidiary. Then you'll be taking the goods there, then you look for market in that export market. So they are owned by exporter and registered in the export market. So it's like, let me take Tumaini decides to open a branch in Tanzania. So it will be a subsidiary in Tanzania, and we'll be exporting this knowledge to the people of Tanzania. So we call it subsidiary. So those are the three types of export dealers that we come across. Del Credere, huyu tumesema, they do what? They distribute the goods. They also collect on behalf of the exporter, and they earn a commission for sales and collection. The other distributors, he buys the goods directly from the exporter. He markets the goods, he sells the goods, and of course, they pay for the goods. Subsidiary, this is, you create a company in the foreign country, and then you sell your goods through that subsidiary. Right. So we get to a point whereby we ask ourselves, then how can we hedge? We call them hedging tools. To hedge, ni kama kuweka fence around. To hedge, to put a hedge all around. How do you hedge against exports or against exchange risks? Because we talked about exports, we talked about exchange risks as one of the challenges of export. So I want to give you that assignment, You look at how can you hedge your organization or your company against against exchange risks. And I think this was there was a niche reason when it was I don't know whether it was in January that we had that we were to have a government to government transaction on fuel, na sijui kulienda aje. Eric, kuliendanga aje? Cha niweke loudspeaker. Tuliambiwa mafuta itashuka bei because we have a deal with an international we have a government to government deal. Kwamba sasa hakutakuwa na shida ya bei ya mafuta itashuka, exchange hakutakuwa na shida ya dola. Na tukaambiwa hata dola itafanya nini? Mwenye ako nayo auze, dola inashuka. Sijui kama ama ni mimi siko Kenya. Naweza kuwa kusemwa hivyo. Eric, kulisemwa hivyo?
Yes, kulisemwa hivyo. And actually it happened. There was an engagement between the government of Kenya and the government of UAE, and they say that an agreement was entered into to that effect. I think why we are seeing the prices of oil going up is as a result of the Finance Act of 2023.
Tuko na dai hadu agava hapa wase ni sawa, asante sana. Yes, I'm just trying to elude what happens. There are ways you can hedge in, because exchange risk is a major challenge when you're doing export credit. And you can agree with us right now, people who are making payments with the exchange rate, I mean with the US dollar, they're having it a rough time because now the dollar is very expensive. So there are ways you hedge against that major risk. Exchange risk is one of the major risks in export. So how can you hedge it? I want you to just for your own, you may not see a question asking all this, but for your own knowledge, it's good to check on. You can have, there are various ways, holding currency account. You can open an account. Like here, if you are handling and you're doing a lot to do with dollars, you can choose to open a dollar account. So that dollar account assists you to hold the currency in the dollar form. So hautakuwa na shida mingi. Then we also do what we call selling expected receipts. Unaamua, this one, I'm expecting this money to come. Let me get the money right now, and I sell it at a discounted rate. So that also is a way where we call it factoring. You can factor the amount you expect to cover yourself from the exchange risks that may come your way. Then there are also currency options. You can have options of not just the dollar, you can have the pound, the euro, unaangalia ni gani. So you put all of them there that you can pay on this option. Then there is what we call the spot rates, and there is the forward rates. The forward rates is where you say that whatever may come along the way, this is the rate. At a future date, this will be the rate that we are going to charge. So these are ways of hedging your export earnings against exchange losses that may come along the way. And then finally tuko hapo chini kabisa, information on importers for credit evaluation, because I know you are talking about risk assessment, risk evaluation. You may be asked, somebody may ask you, how can I assess an export customer? How can I assess them? Where can I get information about assessing them? So we also use just the same things that we use locally. You can look for bank reports for those countries, for the central banks of those countries. You can talk with the agents to find out more. Do you know this customer? So the Credere agent can tell you this is a good customer, this is a bad customer, so you can evaluate from that point. You can also decide to do a sales visit. And this is usually very important. I know if you are to talk with people who've done export credit, they will tell you how they lost at first. You can lose a lot of money when you start dealing with export customers. So what you do before you even start selling, it's good to do what you call having a sales visit. Unatembea hiyo inchi, unatembelea huyo mteja, unashopara, unaangalia, unamjua. Then financial accounts, financial statements za huyo customer. you can also check how credible that company is with the embassies and the consulates of those country or of the country of the importer. Then you can also involve your embassy on the other side to do investigations for you, and you use their agency on their embassy on this side. And then of course credit insurance companies, you can also use them to help you carry out the assessment on your customers. And of course the other credit groups, the Moody's, you can use the Moody's to check them online. There is what we call global credit international. You can use them as well to assist you to carry out assessment on risk. So with that, I think my people, if you are asked about export credit, I'm sure this one, it will be a walkover. So key points I think that we need to know about that is just make sure that you understand. Remember what you started with: terms and conditions of sale, what to have in your terms and conditions of sale, or what we call SLA. Payment terms and methods that are commonly used. We talked about open account, documentary collections, documentary letter of credit. We talked about challenges and risks associated with export credit. And now we've also talked about export credit documentation. And finally, we've talked about Incoterms. So if you can be able just to have that knowledge, it is good for your work for future, and it will also be good for you as you will be answering your examination. Maybe I can take a break as I ask any question, any comment. Tumeelewa? Imeingia? Imeshika? It is your turn. Naanzanga na laini, nianze kwa Daniel. Daniel, are we together?
Yeah.
Any question or any comment?
Thank you.
You are good?
Yeah.
All right. Aya, Moshiri, Sam?
Yes,
Yes, what? Moshiri, wewe?
I'm good.
You are good? Okay. Rose?
Yes, I've understood.
All right.
In terms of the small imports that we do,
Yes.
how do you know of these terms? Like, if you're just importing something from China, a small thing.
In your document, in declaration, in those forms, kwa hizo to documents, you will see those terms there. Just be keen. In fact, I wish I had one. I would have shown you. Nitaangalia kwa nyumba, then I can share with you. But they are usually on documents.
Because we have instances where maybe the item is brought to your house, but it has a damage. Then how do you claim?
Those are the challenges. Those are the challenges. You should have included in the contract. So if there was an insurance, then you claim through the insurance.
Okay.
Yes. Now that is where we talk about CIF, carriage insurance, CDO. So that one, if there are damages, now that one, it goes to the insurance because they were damaged when they were on transit.
Okay.
Yeah, sawa. Asanteni sana. Let me just move from here. I think I can do an intro on the next topic. We can do an intro on the next topic as we progress. So I'm happy, and just an assurance that we are going to make it. So don't worry, we shall tutamaliza na tufanye revisions, so you don't have to worry, right? So let us go to our topic number 5. You can mute. That must be kindly mute. Yeah, thank you. Eric, wewe ulikuwa na jambo? Umeshika?
Ndashika nikisoma tena.
Yeah, sawa. So our next topic, the next topic we are supposed to look at, we are calling it the credit department. The credit department. So let me just open that shared list for credit department. don't know whether the one that I have a problem. Yeah. I think my whatever is not opening. Let me see what I can. Let me get my other notes from somewhere else, because ama nini imehang. I can close it and open again. Labda punda amechoka. Just a minute. Oh, limits reached. So I may not be in a position to do that. Just hold on. So, but as I'm opening, where I need to open, I think basically what? Basically a credit department. We shall look at it and even expound more as far as a department is concerned, even in the banking sector. Customer assignments. This is customer syllabus assignments. CCP, foundation, credit management notes. Okay. A browser or a window, display capture, window capture. Credit departments. In a few I'll be there. Naitangwa failure by what? By systems, ndio? They can fail us sometimes. Okay. A window. Very good. Then I go to share. Good. So we are talking about credit department, and even as I'm talking about it, I like also looking at what I also looking at the syllabus, so that you can be able to have a good intro, so that you can also prepare yourself as far as that particular topic is concerned. Just a minute. Some of my students, I need to look for them. I don't know where they disappeared to. Ama waliona washapita hiyo. Okay. All right, there we go. I mean, I'll not display the syllabus. but I just want to have a feel of the syllabus, what we need to know. One, the areas you are supposed to have an understanding is the role of the credit department. And have an understanding of the organizational structure of a credit department, qualities of a good credit or officer or credit manager, duties stroke responsibilities stroke qualification of a credit officer or manager, departmental relationships between finance, sales, and all that. So the roles, the structure, the qualities of a good person who can work in credit, duties, and departmental relationship. So that will be our topic number 5. So I'll do intro today, but I'm sure we can't finish today. We can finish in another lesson. I'm sorry I have to start another topic after another one, but I don't like it like that. But because we have time and due to time constraints, allow me or allow us to go directly to that topic. So a credit department may vary, where the placement or where the credit department is anchored may differ from the non-financial or what we call trade credit and the financial or what we call consumer credit, because sometimes you find that in the banking sector, maybe my banker is here, ataniambia the credit department iko under operation amba iko under wapi. Eric, where are you as far as your company is concerned?
I think we may not clearly say that the credit department lies in the operations or not, because like
Okay.
where I work, the credit department spreads its wings to operations divisions and non-operations divisions.
Okay.
Yes.
So napata iko kwa operations na iko kwa other departments. I don't know for Rose. Rose, are you in banking or in SACCO?
Yes, I'm in banking.
You're in banking, yeah. Where is the what in which place is the credit department in the bank?
Okay, it's not under operations.
Yes.
I'd say it's more of independent.
It's more of independent, yes. Actually, yes, for
Yes.
banks, most of the time, it's an independent, because if you look at even the board levels, we even have a credit committee, sindio? So unapata kwamba, it's because that is the core business of the bank, so it is given a position on its own, stand on its own. So it may even have a credit director, inakuja na head of credit, inateremka hadi unapata sasa iko na wale assistant credit officers na credit officers, right? Daniel,
Yes.
where does the credit department lie in your institution?
Okay, from the independent department,
Yes,
it is very independent.
it's also independent.
We are speaking taking consideration that of the income standpoint.
Okay,
So it is very
all right. Sawa, nasikia uko kwa njia. Sawa, we bear with you. Thank you so much. Yes, indeed, that is true. That in the banking sector, it is an independent department on its own. In some institution like the trade credit, you will find that credit department or credit section is under finance. So you will find that most of the time, the credit controller or the credit manager reports to the finance manager. Or some institutions where credit is elaborated, you'll find them now reporting maybe even to the finance director. So you have the finance manager reporting to the finance director and also the credit also department reporting to the director. So it varies from one institution to another, so utapata kwamba it cannot be the same. But I think the most important thing is for this credit department or credit section to be in a position to make decisions that are independent, so that they are not compromised, and they are also not what we call, we don't become also business impediment, because sometimes we are accused that we impede business where we are placed. Some institutions even have a credit person reporting to the head of sales. I don't know what kind of a damage that would be in an institution whereby mtu wa sales ni anaambianga jamaa wa credit, ebu fungua hiyo account, ebu ruhusu huyu mteja nini achukue goods on credit. It can be very chaotic, and companies that have tried that, I want to believe they are not existing in the current world. So we see that credit and sales teams we see that most of the time, based or depending on where credit is placed, there is always a war between either sales and the credit, or the credit fighting the sales. But most of the time, sales fight credit because they see that you are not willing, we are not allowing us to sell to our customers. So the credit control department, I have a structure here which can guide us. Maybe this, if you look at it, maybe you can try to see from the point of your institution. We see that we have the credit manager, and at the credit manager, I've not even put the person on top, but I've put the credit manager. Under the credit manager, we have the new business, whereby customers are onboarding, where customers come on board. We have account and admin, the person who opens the account for customers, who creates ledgers for the customers. We have the department that also doing collection, and that is also another one doing recovery. So, and then now the credit manager could report either to the head of credit, or it could report to the director of credit, or even to the finance manager, depending on the institution that you maybe from the nature of the institution you are in. And I think there is no war as far as that is concerned. We've agreed upon it. So under new business, it's good to understand what normally happens when in a credit department. Or you could be one in your credit department, but all these services are being offered under you, because you'll find that you are in charge of looking at the credit worthiness of your customers, putting customers or bringing customers on board as quickly as possible, being objective as far as assessing the customers for credit is concerned. You want to please the customers as they enter through the door. You want first impression. You also have to have what we call teamwork with the sales and marketing department for them, because they are the ones who are bringing in the business. But that may differ from one institution to the other. Then administration and account section or roles, they involve updating of the customer records, chasing customers for pending information, maybe hakuleta ID, maybe hakuleta a certain document, so unafuatana na yeye ndio akupatie. Changing details, amekwambia address nimebadilisha, namba ya simu, that should be done as well. And of course capturing of customer information accurately. Then we have the collection unit. This is now whereby you do what? You are in touch with your customers, following up for collection, ensuring they pay on time. You check and ask, why haven't you paid? So those are the key areas, and that is what normally happens under those sections. And then the recovery unit, this is whereby now this is where the customer has failed to honor their obligation, so you take some serious action against them. Maybe you may even involve now the auctioneers, the lawyers, and all that. So you could be one, but you are doing all those activities or all those duties within the organization. So in a more elaborate manner, we look at the role of credit department within the organization. So those are more of their block But now when you break them down, we have the various roles that normally take place. We see that in trade credit, the person in charge of credit is the one who ensures that orders have been serviced, orders have been released, the customer account is up to date, the billing has been done right, the raising of invoices has been done. If there are any conflicts or any disputes, they have been resolved. So we normally group those roles under different headlines, which we call assessment of risk. You have to carry out assessment of credit risks on your customers. You have to establish credit terms. I know you've attended the risk class. So you are supposed to carry out assessment to check the creditworthiness of your customers, to ensure that when they come on board, they will not default within the very first month. Then you establish terms by asking who gets credit, how much do they get, what is the credit limit, when should I stop credit. So you have to establish the credit terms that you're going to give to your customers. Then the other categorization of our roles and duties is monitoring and controlling of customer accounts. This is whereby you are ensuring that they are within their agreed terms, they are within the credit limits. You are also looking at the high risk customers so that the exposure is not too high on the organization. And then you make sure you take action in good time before it is too late. So this is the aspect of monitoring. And if you can remember, when we talked about the credit cycle, we talked about monitoring and the control of customer accounts. So the other one is maintenance of the sales ledger. This is now whereby a sales ledger, we said, contains the summary of all transactions within an institution. The invoices, the credit notes, the debit notes, the receipts, the discounts, everything. So it is the responsibility of the credit department to ensure that the ledger is maintained and the ledger is also balancing. Not just maintaining, but ensuring the ledger also is balancing, so that you can also be able to produce customer statements at any one given time. Then another key role is the one we've talked about, collection. So if you're to group the roles of a credit department, we can group them under those 5 categories: collection, maintenance of the sales ledger. We can also talk about monitoring and control of customer accounts, and establishing credit terms and assessment of credit risks. So those are the key functions and that are squarely under a credit department. And if you look at it, maybe even from a point of the banking sector, you'll also be able to see that there are things that fall squarely in our departments, whether it's on the aspect of what we call credit administration, right? Then we have the credit analysis, right? So you carry out analysis. There is the collection department or section, and there is also the recovery unit. So you can be able to see that as much as the trade and the other banking credit is concerned, there are similarities that are normally there. So those are the key functions of a credit department. And maybe our second last part that we can cover today is we talk about duties, stroke responsibilities of a credit officer or a manager. So based on those functions, what are you supposed to do? What are the people in your department supposed to do? One, it is they are in charge of accepting and processing applications for credit and supporting documents required. So wewe uko pale as a credit manager, as a credit officer, documents imekuja, umeangalia checklist, umetik, umeona hii na hii na hii iko, hii haiko, customer alete. Then appraisal of the credit application. When you're appraising, you are looking for the merits and demerits of that applicant. Why you should give and why you should not give, right? The other one, evaluation of securities or collaterals that the customer has provided. Amekuletea collaterals, ameleta security. It is up to you to ensure that those documents are also evaluated to establish whether those collaterals are good or not good. The other one is obtaining legal opinions on securities held. You liaise with the legal team to ensure that the security documents you have received, they are accurate. maintaining of customer information file, or what we call customer master file. Una make sure all information required, they have been captured accurately. Checking with the CRB on the rating of your customer before you lend the money to them. Compiling and communicating approvals or rejection to customers. You must tell them you have your loan has been maybe your loan has been approved, or your loan has been rejected, and why, maybe sometimes why the loan has been rejected. Collecting payments as they fall due. Documentation and charging of securities. Setting up repayment schedules for the customers. Advising customers on matters of credit. Handling customer complaints at all times. Monitoring and follow-up of advances and recovery of bad debts. So those are the duties or responsibilities of a credit officer. Hii question inakuanga mzuri, inakuanga na iko na nyama mingi, si ndio? You can be told even at least, you can be told describe, you can be told to outline responsibilities or duties of a credit officer. They can even add there and say in a financial institution, or in a trade institution, so, or in a manufacturing institution. So just know that those they are interrelated, and you should be in a position to tackle such a question when it is asked. So maybe based on all this, allow me to now engage you and ask you to give us what you believe are the qualities or the traits of a credit officer who should perform the above responsibilities and duties. Let me not talk about them. Collecting, carrying out assessment, evaluation, appraisals, documentation, or checking on documentation. What are the traits or qualities or characteristics? Sasa hapo nataka kusaidiwa na nyinyi. Sitaki kuisema, nataka tusaidiane kwa hayo. Sasa mniambie, what are the traits or the qualities you think then you should have to be in a position to carry out those duties. Whom do I start with? Dan alienda. Tuko tu na Eric na Rose. Daniel ameenda, Sam ameenda. Alienda wapi? Okay. Challenges of online, Imagine. Well, okay. Rose, tuanze na wewe. What do you think qualities you should contain or you should possess? Unaweza sema 3 ama 4.
Okay, I think I'd say good analysis. Should be able to see the financials and everything and tell the direction the client is taking.
Yes.
So good analytical skills. Then I would say also communication, because there are a lot of communication between maybe the salesperson and you. So also you have to be empathetical.
Yes. Empathy.
To understand the business person.
Yes, sure.
And basically also just have knowledge of the organization.
Yes.
The policies they have, what you can approve, what you cannot approve, what your limits are, what should go above you. Yeah.
All right. Asanti.
Yeah.
Asanti. Wacha tusaidiwe na Eric sasa na yeye atuambie. Asanti sana Rose.
Thank you. I think for me, I would start with possession of credit skills. Our credit officer or manager should have credit skills for them to be able to discharge their duties effectively. And number 2, a quality that is very critical for a credit person is integrity. Yeah, because it involves money. So integrity is very key. And then I think we need qualities of agility, in the sense that you are able to execute with speed. So that you meet customer expectations. You know, when you are appraising a customer and they're expecting money, there's a time aspect that is attached to those requests that the customers give. Then which other one now?
Okay.
Yeah, those ones.
No problem. All right. Thanks so much. That is from Eric. Then Daniel, welcome. Unaenda ukipotea. Sawa sawa. It's okay, Daniel. We are just tackling an area on the qualities and traits of a credit officer, qualities or traits or characteristics of a good credit officer. And we've talked about integrity and honesty. That has already been raised by all of us. Ability to make independent decisions. You should have good negotiation skills, because when you are collecting, when you are following up for payments, you will need to have good negotiation skills. The other one is you should have an aptitude for analyzing financial details and understanding financial reports. So when a customer brings a financial statement or a balance sheet, or what we are calling the income position of the company, you should be in a position to make good of that statement. Then the other one is accuracy and precision in dealing with numbers. That one we've been told clearly. Persuasive, you must know how to persuade customers. You must be persistent for you to get paid. You must be a good communicator orally and in written form. Problem solver. You must have an optimistic approach. Collection is about being optimistic. So si mtu wa give up. Then knowledge of the credit policy and the regulatory requirement, a strong sense of judgment and analytical ability. So those ones you have already mentioned about them. So that is very good, and I think that can serve us right for today's lesson. Then, God willing, next lesson we shall finish on interdepartmental. We shall also talk about expectations, and then after we are done with that topic, I think now we'll be talking about fundamentals of credit assessment and analysis. Which one, I know you have covered it, but we will just talk about it also in this lesson. So I think that the knowledge I've shared today is sufficient. You are able to answer a number of questions. The functions of a credit department in an organization, the characteristics and qualities of a credit person, and now on what we talked about, export credit. So this is usually a bit lengthy, but I think after this, the other topics will be a lesson. We are about to finish those topics that overlap, so you will bear with us. Maybe up to that point, I could call all of us to give a final shot, as we call it an evening. Then we can meet next time. And I promise to give a makeover for my makeup class for the missed lesson. I'm feeling guilty still, right? So we can start with Daniel. Final shot as we wind up.
Yes, I'm okay. I've been on the road.
Oh, you're on the road. Ni sawa, Daniel. It's okay. Your safety first. Your safety, yeah. Eric. Eric is here, yes.
I think mine is to appreciate. Mine is to appreciate you, for the lesson. And I know the exam is drawing nigh. Just to call upon my colleagues here that we start reading. We start reading because the exam is coming.
Asante. Rose?
I think the lesson today has been good.
Yes.
So maybe just to the rest of the class, as the exams approach, maybe we can even plan to meet somewhere.
Okay, all right.
Just to try and revise before the exams.
Actually,
It also be good to get to know each other as fellow bankers.
okay, sure. Yeah, that's okay. Actually, when exams draw near, just feel free to come here. If you have some leave days, some off, just come and sit here. There is internet, there are rooms that you can just sit and study. And anytime you feel like you want to come and see me physically, like Eric has decided today, you're welcome. We have enough space.
Okay.
Sawa Rose, asanteni. I hope you're reading and hope the materials online are of help. And remember,
Yes, there.
yeah, and remember the teacher's materials supersede these ones. So yani kama zangu ndizo natumia, lakini zingine si tumetengeneza na sio mwalimu anatumia. So usione ni kama first you give priority to mwalims materials, but now these ones are to top up. But for me, I use the ones that are on the portal, so there is no fear or worry. Sawa? All right, have a good evening.
Sawa.
Thank you so much.
You too, thank you.
Yes.